Hi, it's Jason and thanks for watching. So this segment is on commercial finance, something I'm really passionate about because for 16 years I worked in 4 banks being a business banker and a commercial lender. So first let me just separate what people think is a business loan and a commercial loan. I'd like to first say that a business loan, in my terminology with my history, is a business loan that's secured by residential property. First thing, you can turn this off and go back to another clip on home loans, because if you get a business loan that's secured by residential property, there are 3 lenders out there who will do the commercial loan at 30 years, 15 years interest only, exactly like a normal home loan. If you walk into most of the major banks, they'll walk you straight out the door if you say that you want to use a residential security for commercial purposes. So bear that in mind. Make sure that you get a broker to have a look and tell you what other banks are offering. The other thing is, if it is a genuine commercial property, especially if it has a real residential flavour to it, there are 1 or 2 banks who will consider lending against that as a home loan as well, even if it's not zoned residential. But let's have a look at a true commercial property. So it's true commercial used for commercial purposes. There's 2 kinds of commercial properties. The first one is a very vanilla, non-specialised property. There's 2 or 3 banks who are so much better than the big 4 in this segment. In fact, the fixed 3-year rate is about the same as what you get on a home loan these days. So then for specialised properties, however, when I say specialised, it's where the income stream actually gets taken into account in the valuation, i.e. petrol stations, childcare centres, things like this. That's a little bit different, and yet sometimes the big banks are the only option. Particularly when you're borrowing more than $3-5 million, it really does come down to the big 4, but I have enough connections in the banks to make sure that we get it structured correctly. Especially if there's partners involved and you're talking about joint and several unlimited guarantees. People don't sometimes know what that all means, and when 2 people go into partnership together, it's really clear it's really important to clearly structure the mortgages so that all the parties are dealt with fairly. So I'd love to talk to you more about that. My name's Jason from iChoice, and thanks for watching.